Hey yo, what's up people? How are you doing? Welcome back to the one and only best trading channel for volatilities, indices, booming crash, the DEX, the jam, okay? Right here is Mr. TCee from Certified Traders. So in today's episode, this is the continuation of the first which I posted about a week ago. And I was talking about raising something like $2,000 plus, okay? But unfortunately, on the first episode, I didn't manage to reach the target. The episode ended while the account is $150. So you can see that I've delayed to post the video because right now it's about 13 days later. Okay, my account got logged on the cashier due to identity verification. So I submitted the verification and everything is now well. The account was verified. Okay, so without wasting much of your time, let's slide deep into today's episode. I'm trying to explain some of the setup which I took, showing you the progress on the account. Remember, I started with the dollar and my target is to reach 1,000 plus. So let's get to the chart. Okay, on my chart there is crash 1,000 and this is my fourth setup. Okay, this is my fourth setup. So as you can see on the screen, there's analysis. Even a beginner who just started trading can understand what's the analysis on my chart is saying. Okay, so this is price action and there is support, resistance, and then the horizontal line. But then some of the people who are new to this trading strategy might not understand it. Okay, so I'm going to be explaining step by step why and how I place this trend line, like all these funny and fancy things that you are seeing on my screen. So this is the first stage which I did when I was trying to analyze crash 1,000, and this is for our time frame, and it's a must when that's when you're analyzing. You start from bigger time frame. We call it top down analysis, right? So this is the first touch of this trend line. And you know, when you're trading, what makes a trend line valid? Yeah, the peaks. First two peaks is the one which you are going to be using along the chart. So this is the first peak, and then this was the second peak. Okay, so it was an obvious if the market managed to bounce on this first peak and then on this second peak, as time goes on, it was actually going to come on that same trend line. Okay, remember this is the zone, but it's only that it's going upwards. Okay, most of you know the zones on the horizontal connecting the support and resistance. Okay, but you can also draw the zone on an uptrend. So this is the support, this is the another support, and then right here the market came for the third touch. Okay, and then right here it came and bounced, and then after bouncing it bounced again on this zone, forming the resistance, and then the support becomes the resistance. Right here it came and broke, and then it came again for the fifth touch on the trend line, and then it failed to break above. Okay, so this was an area where the market was turning. Okay, this an area where the market was turning, starting from right here. As soon as it was approaching this level, it was turning. Okay, so besides that, right here there was another resistance, and the fact that the market was turning on this zone and combining it with the zone of resistance, we know that when the resistance, that's where the market turns. Okay, that's where the market changes from uptrend to downtrend, right? So I used this previous peak of the resistance to mark where the market is likely to turn, and you can see that on this zone where I took myself is an intersection of horizontal line and trend line. Okay, and besides that, there is a reversal pattern which is an M-shaped. Okay, and M-shaped formed when the market is about to change from uptrend to downtrend, right? And there is M-shaped on 4-hour time frame, and then if we switch to 1 hour, we can also see that there is another reversal pattern, and then this one is the one which have the first leg which is slightly below than the second leg. Okay, I talked about this on some of the videos on the channel. There are three types of M-shaped: the one which have the first leg which is slightly below, and then the one which have equal levels, and then the one which have the first leg slightly above than the second leg. But in this case we are talking of this first one. Okay, but anyways, remember we are still doing top-down analysis. This is 1 hour time frame, and then if we switch from 1 hour to, let's say, 15 minutes time frame, we can actually see that there is another reversal pattern. here's the first peak, here's the second second peak. Okay, so that's why I always recommend people to start from bigger time frame when they are analyzing, because it gives you a bigger picture of the market. Because if you try to maybe take an entry on 4 hour, of course the analysis might look clean, but there will be some of the things that you cannot see on bigger time frame, and you can only see it on smaller time frame. Okay, so it's wise to do the top down analysis. Anyways, let's go back to the setup. So this is where I took my sell on this peak, and we can actually say that the risk to reward ratio is perfect, because I risked this small space to make all of this. Okay, so after doing this analysis, marking the support, the trend line, and the resistance, I took my sell, and then as soon as I executed, the market dropped all the way down. And when it comes to trading, most of the people focus on the accuracy of strategy, which is not bad. Okay, a strategy must be accurate, but then that's not all. Okay, a lot of things have to be considered when you're about to take a trade. Right here, the end was perfect, but besides that, we have to know when to move out when the market goes according to your prediction or according to your analysis. So I had to use this middle trend line to be able to identify where the market is going to turn. Okay, and so I just copied this trend line and then I pasted on this peak. Okay, and the fact that the market bounced right here, it was obvious that it was actually going to come and bounce again on the same zone, since on the previous history there was no any peak. Okay, so I just used this one, and then I was studying the price movement of the trade, and I noticed that it bounced right here. So it was an obvious that as soon as it comes again on the for the third touch, it was going to one. So I used this zone for my take profit, and besides using this trend line, there was this zone also of support and resistance. You can actually see that on the horizontal line, it bounced right here, it bounced again right here, and then right here it bounced. And combining the trend line and the horizontal line, you can actually see that there was an intersection and it bounced right here. So as soon as it reached this level, I took my profit. So I want you to see one thing. Right here there was an intersection, the market dropped. Right here there was an intersection, the market bounced. Okay, so this is actually how the market moves. Okay, so if I was someone, I could have ended another trade right here, buying this crash 1000, but unfortunately I don't trade against the spikes. Okay, so if I took this trade, which means that I was actually going to do something which is not in line according to the to my trading style or to my trading strategy or to my trading plan. Okay, you must not go against your trading plan if you want to survive in this game in the long run. Okay, so after taking it, I took my profit right here, and there's a perfect risk reward ratio. Besides this, there was also volatility 2.51s. Remember, there's another setup which I took after taking the crash. This one I raised 58 to 180 something, if not mistaken, and then after that there's this volatility 2.5 which I took. Okay, and then as usual, when I'm doing the analysis, I don't just start by pressing buy and sell. I do something called top-down analysis. Okay, whereby I start a price movement on each and every time frame, and on 4 hour, first thing is to identify the major peaks. And right here, the major peak I used, this is the first trend line which I drew, the middle trend line. Okay, and as you can see, I marked this first peak, and then there was this second peak. Okay, once we have this peak, is now is for you to draw the third and the fourth. Okay, so on the third, the market didn't bounce, it made a consolidation, and this was a sign that it's failing to break this, it's failing to break below this level. So it made a consolidation, and then to people who understand price action well that much, you can come and draw the upper trend line and the lower trend line, and then we have a continuation pattern which is called a flag somewhere right here. Okay, I could have entered a sell, so I had to wait for the market to break below this trend line, because I was anticipating a bounce right here and then a bounce. After that, I was waiting for another bounce right here. So from right here to this here, I was just observing the market. Okay, that's why I always tell people that trading is not all about pressing the button. Okay, you might be monitoring how the market is moving, because by just looking at the chart you can learn a lot of things. Okay, so after it made a breakout right here, it came and formed a reversal pattern, and this one is a W. Okay, a W is formed when the market is changing from downtrend to uptrend, and as soon as it formed right here, the market went all the way up. Okay, and then after going up, it bounced on this same zone of the upper trend line of this support, but in this case it formed the resistance. So this is the area where I was waiting for. So as soon as it reached that, I then started to look for selling opportunities. Okay, that's when I started to look for selling opportunity. So right here, that's where I started to look for selling opportunity on the bonds on this trend line, and beside the trend line there was this rejection candlestick, and this rejection candlestick, they appear when the market has reached a certain level which is failing to break above. Okay, and then on this same zone which have this rejection candlestick, if we switch to 8 hour, let me show you something. If you switch to 8 hour, you can actually see that on this same zone of resistance there was another resistance right here. Remember, these are the turning points, these are the areas where the market turns. Like if we look on the previous data, for example, right here there was a resistance, but then the market came again and then it bounced. Right here there was a support, and then the market came again, it bounced on the same level. Okay, like if you see a resistance, that area, have got money. Okay, you have to do further analysis every time when you see a resistance, like every time when you see a major peak on the bigger time frame. That's where the market is likely to turn on the same zone of that peak. Okay, so after identifying the support and resistance, after identifying the major peak of the resistance and then the trend line, obviously there was an intersection, like what I said on the previous setup. Once you see an intersection of horizontal line and trend line, that's where money is. Right here there was intersection, which means the market was going to bounce. So I took my sell right here, and then as soon as I took my sell, the market dropped. But then finding a turning point alone will not make you profitable, because I know a lot of people who can enter trades well without any drawdown, but then when it comes to take profit, they don't know when to take the profit. Right?